Since I started covering Spotify on Asymmetric investing, one of the big potential sources of growth has always been the advertising business. This has kind of been an underperforming part of Spotify's business. They've done really well adding subscribers on the premium side, inching those prices higher, cutting costs to improve their profitability and free cash flow. All of those things are moving in the right direction on the premium side, but there's limits to the business on premium. There's only so many people around the world who are going to be able to afford to pay for music, audiobooks, potentially podcasts or video in the future. The advertising business is ultimately where the 10x opportunity is for Spotify. And that's why reports that the company is going to build its own advertising exchange for both video and audio is huge news, and they're partnering with the Trade Desk. This could bring the ad-supported business to a much different level than it is today. And I'm going to get into exactly what is being reported, not officially announced yet from Spotify, but wouldn't be surprised to see that over the next few days, and what the potential impact could be on the business, because really revenue and the bottom line could be supercharged by the advertising business. But let's dig into that. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content, and thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's get right to what Axios was reporting today. This is the report from Axios. Spotify launching an ad exchange and will partner with the Trade Desk. So what they're saying is that Spotify is piloting an ad exchange or supply side platform. That's basically where advertisers are going to be able to go to that platform and choose where they want to advertise, what they want those advertisements to look like, what the ROI that they're looking for is, and just helps you automate and digitize all those things on the back end. So that's going to help them scale its automated ad offering. 3 familiar sources told Axios. The focus will start on video, but they did say later in the article that they're going to be moving to audio relatively soon. Couple of things there. The move to start with video, I think, is interesting because I think Spotify is a really underrated company in video. If you listen to any podcasts on Spotify these days, you may notice that video is popping up more and more. And you may not even know that it's running if you have something like your phone in your pocket, but video is being included with a lot of podcasts. So could the podcast platform and business really become more than just what we traditionally think of as podcast, as an audio only medium? There's no reason that podcasts have to be audio only. Could add video. Management has said in past conference calls, people and companies are using podcasts for all kinds of different things that they didn't envision. So they're doing things like classes that you can pay for with a subscription. Does something like video open up all kinds of opportunities to compete really more with YouTube than traditional podcasts? I think that could be a really interesting growth avenue for Spotify. Getting into video in lots of different ways. Ads will definitely help that. They say internally, this is called Spotify Ad Exchange, and can be plugged into various demand side platforms. That is basically what the Trade Desk is doing. They are the demand side. So if this comes to fruition, and it does start with video and eventually moves to audio, I think this is the kind of thing that can supercharge Spotify's advertising business. There are a few reasons for that. One, they have a ton of inventory that they really aren't utilizing very well. Podcasts, I've seen some reports that say that podcasts are between 1/10 and 1/100th as well monetized as something like the radio. That just seems absolutely crazy. You should be able to make more money on each advertisement targeting somebody specifically on something like Spotify than you can with the radio, but that's not where we are today. The other thing is Spotify is building tools to help companies build more artificial intelligence ads. So are we moving to a future where part of this platform is, hey, here's my 5 different ad reads. Here's my 5 different voices I want to use for that ad read. See which one of those 25 advertisements works best. And you don't have to actually hire somebody to actually do an ad read for you. Could be a really interesting way to scale that advertising business even more using artificial intelligence. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. So how is this going to impact Spotify's revenue and bottom line? I'm going to show you this in a few different ways, but first I want to start with a look at Spotify's premium revenue and ad-supported revenue. You can see that premium revenue is almost 10 times higher than ad-supported revenue, $12.7 billion compared to $1.8 billion. So you can see that there's a ton more money coming in from people who actually pay to use Spotify. But when you look at the number of subscribers, those numbers flip. There are far more people using Spotify who are ad-supported than people who actually use the premium subscription. Now, there are a number of reasons for this. Most of the developed nations, which is where most of the growth has been happening for Spotify over the last few years, are more ad supported than premium supported. But there's clearly a huge opportunity to monetize this ad-supported business in a much, much better way than Spotify is doing today. The next thing I want to show is margins, because this really shows where the opportunity is. Spotify's premium gross margin hovering right around 30%, and that's because they need to pay about 75% of their revenue to record labels to pay for music in particular that they're licensing for those premium subscriptions. So management thinks maybe in the future they can get that to 35%, but there's basically a cap on the margin you'll be able to generate from the premium business. But in the ad business, you don't have the same problem. If you look at advertising companies like Meta or YouTube and the Alphabet properties, advertising margins should be well in excess of 50%. Can be significantly higher than that. Depends on what your profit sharing numbers are, what all that looks like with creators. But it should definitely not be as low as the margins that you see in this chart right here. Basically, Spotify has been right around break even from an advertising gross margin perspective. So add in a little bit of operating costs there, and advertising is probably losing money for Spotify over the last decade or so. So that's where there's a huge opportunity. The inventory is there, the listeners are there, the data is there. Now you've got to actually build out this advertising business. Management has been talking about how they're building out this ad business for years now, but it takes a ton of work on the back end to build this platform that companies can just plug into. But here's the good news. Spotify has 626 million monthly active users. That is a massive user base for any product. There are only a handful of companies that have more users than that on any of these platforms. So as Spotify is trying to build an advertising platform, this is going to be more attractive than trying to advertise on Twitter or on Snapchat or even on Reddit. This is going to be a massive platform, and putting the investment in actually building ads and making ads work could potentially pay off in a huge way for Spotify. So this is why I think this is such big news. It hasn't gotten a ton of attention from the market. The final thing is that this is really going to help with Spotify's overall operating leverage. You can see that in this chart here. The company's revenue has grown a little bit. I mean, nice growth, 15% growth over the past about year and a half here for Spotify. But free cash flow and net income outpacing that. Net income has gone from negative to positive. Free cash flow obviously surging over the past few quarters. This is going to continue as those higher margin products play a bigger role in the company's revenue. You're going to see that flow disproportionately to the bottom line. That's the operating leverage that you want to see in a technology business. Stock is only up about a percentage point today, so it's beating the market, but not a huge reaction, despite the fact that I think long-term, this is the kind of thing that could actually drive Spotify's revenue and bottom line to the next level. But let me know what you think about Spotify and advertising. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.